What's going on, traders? Welcome to the channel. I'm John. That's Groot. What up, Groot? We trade options here. All right, guys, we are talking about something important here. Should we prepare the portfolio for the mother of all crashes, the Michael Burry spook in the markets, all this kind of stuff? Let's talk about it. I'm going to explain in my own way how I plan to prepare for anything that is like that. And this is a very good way to look at this system even as you go beyond that, even if we're in an uptrend, even if the market is trading sideways, or if there is a crash going on. Okay, so that's really important there. First things first, let's talk about a couple things here regarding the account. In here in Tastyworks, I have my SPY puts that I bought. These were just puts that were kind of like not a heavy bet, just a, hey, the market is going slow. It is starting to hit exhaustion points. I'm just making a small bet that maybe this goes lower. Obviously, you're seeing that didn't play out so well, but the other kind of downside bet I have is in what is called UVXY. This is a ultra short 1.5 leveraged short ETF. So basically, as this goes higher, it's due to the idea that the market itself is going down the SPY, these kind of things. So that is what I have on here. But keep in mind, not financial advice for one, always. And then for two, we're just talking about the general idea on maybe if you're looking at your account, maybe you're thinking about certain things like risk management. This is what's important here. So let's just look at the SPY here really quick on the daily chart. You're seeing quite a bit of indecision. Today was a big indecision day, very low volume, and we closed in the middle. So middle to lower area of this candlestick, and that is showing that we are hitting that exhaustion point. I talked about this a week or so ago. And it's also interesting to see Michael Burry is kind of sharing very similar ideas there, and that's great. It in a way it can add to someone's conviction, I guess, to say that other people are thinking the same thing. However, keep in mind, a year ago the market was very irrational too, so it can stay irrational longer than most people have the money for, right? Longer than you can stay solvent. That's kind of the saying that some people will say. But you need to think about this. Burry in The Big Short, he was right on his assumption, but wrong for years on the timing. And that's what's crazy about options. That's what's hard about trying to time the market. Who can truly time the market? Not even the best people in the world, right? So you need to remember that whenever you set up a trade. So the reason I have these trades on is to kind of hedge portions of my portfolio. Keep in mind, they're very small bets. These are not, if I felt really high on my conviction, I'm feeling great about this. This would be, $5,000, $10,000. I'd be going like really heavy here and putting these bets on to say, hey, this is going down, but also I'm taking on more risk. And the real way that you can imagine to better assert yourself or set yourself up for risk in hedging, just for the accounts in general, is your position size. If you keep your size small, then basically if it ever goes to zero, that you just lose whatever that small chunk is. So as an idea, if you think about this, if you keep your size to like 1 or 5% of the account, well, if let's just say it's a 5% bet and that's what you cap yourself to all the time. Well, you'd have to have 20 incorrect bets in a row to basically lose your whole account, right? Or if you're at 1%, it's like 99 missed bets in a row to basically lose out. This is really the bread and butter to managing and creating longer term wealth, especially as a trader. Most traders don't do well, and it's because emotions get in the way. Their fundamentals, they kind of lose that, and that's where things go awry. Awry? Am I saying that right? I don't know. But either way, let's talk about a few other things. AMC was down again today. So like usual, I bought my quarter shares, basically like a movie ticket. So I'm just staying with that. My biggest conviction kind of here, market, I'm not interested in opening new positions other than literally AMC. I know to some people it's like, oh, it's a meme stock, and immediately you have a type of, I guess, bias towards it or something along those lines. But let's look at something that's important here. And literally on like the 5-minute candles, we touched that trend line and just like clockwork bounced back down towards support. So this trend line is really nice. The flag pattern is looking nice. It's really a question of When we get to this point right here, do we shoot higher, lower, or sideways? Big money, I'm going to tell you right now, wants us to go sideways. So you do need to make sure, if you're planning on bets, that you are aware that any options that are out of the money way up here can be very dangerous for that setup. So that is kind of where I'm trying to stage myself in terms of the portfolio. But let's talk about why it's important to keep your size smaller. So I'm on the SPY. If you can imagine this type of movement, let's just say I'm not betting this mother of all crashes. I'm not betting this thing goes, 50% lower, but I am betting that, hey, maybe we see something like this type of movement, right? Where this is like a support level, or we end up near this support level. Well, if that's the case, what happens is, as you do this, you end up setting yourself up by having dry powder available for trading. So if I'm very light on the account here and I don't have any or very little open positions, well, I'm just setting myself up for higher probability positions as we drop lower. Because what will happen, we get lower, and what will happen is you'll see other stocks, say, I don't know, Walmart or any of these other guys, come lower to like these support levels, right? This trend line looks very prominent in Walmart, but you're going to see a support level right here, and maybe we have a bounce off of that too, or something along those lines. Whoops, that's a trend line. Let me change that. And so this is just kind of the way to explain like high probability trades, how to manage your account and your risk a little bit better. But like, that's the idea here, is that if you're buying stuff when it's a little extended, or if the market's extended, then generally speaking, you're kind of setting yourself up on a lower probability basis for a trade.